everyone, welcome to the Trading Battle sponsored by ACAP. I hope you're prepared for an exciting live session as we've invited two very successful yet very different traders to participate in this high energy, high stakes battle. In one corner, we have Phillip Konchar, who has been investing since 1996 and margin trading since 2004. In the other corner, we have Chris Guzman, who has been trading since 2010 and went pro 1 year later. These two traders couldn't be any more different. Phillip mainly trades equity index and commodity futures and incorporates big picture fundamentals into every single trade. Chris, on the other hand, only trades FOREX and fundamentals doesn't matter to him at all. In today's session, there will be 3 trading challenges. And to make our viewing exciting and their lives more difficult, they will be put into a position blindly by the other trader. It is the start of the New York Open. Phillip, how are the markets moving and what trades are you looking to kick off with?
Well, we are seeing a fairly substantial pullback in U.S. equities at the moment. So indices are moving lower. I mean, yesterday, initially after that Fed press release and surprise tapering talk, we had the US dollar strengthen, and that caused equity indices to pull back lower, equities in particular to pull back lower, and impacted commodities as well, like gold in particular. So what I'm seeing at the moment, I'm seeing continuation of that move lower. There was a fairly straightforward a push higher in technology stocks. So Nasdaq made a new all-time high, and we are currently seeing a Nasdaq pulling back off those highs. But S&P and Dow Jones didn't follow. S&P and Dow Jones stayed lower. So what I'm looking at the moment is I'm looking for continuation to the downside after initial retest of yesterday's closing levels. So we are a little bit lower than where we kind of closed yesterday. I wouldn't be surprised to see possibly an oversold rally sometime during this afternoon, retest of those levels, and then continuation to the downside if this sentiment doesn't change. And you also mentioned before the actual event, we have it was supposed to be a quadruple witching day, but it's actually a triple witching day as well today, and that could add another element of volatility in the markets, which are probably trading with low liquidity.
So I'll start out by talking about the dollar. Because as Phillip rightly said, the dollar was rallying quite strongly yesterday. We did start to see a bit of a pullback, and I don't know if you can see my screen or not. But if you're looking at my screen, you can see that we did start to see a bit of a pullback. We did have a bit of a dark cloud cover that formed on this 2-hour time frame on the dollar index. It was a dark cloud cover, but as you can see, as of this current candle here, we're completely invalidating that, okay? And instead what we're getting is actually a bullish formation. It's a morning star, right? And so that makes me think, right, okay, dollar strength, and so I'm going to go to all my dollar secondary pairs and think short, right? And so starting with pound dollar, I've actually already gotten in on this trade. My entry here was 1.3864, so just about here. With a stop loss at 139.24, and I've got my take profit at 137.77. Now, in the case of pound dollar, you can see, we've got a nice strong downtrend. There's our weekly and daily pivot point, which has been acting as resistance for as long as the market has stayed below it at 1.4. And so we also have a counter trend line break in here, which, you can see how the market broke and then tested. The test failed, resistance held, and so I see this as a pretty nice sell-off. And because I believe this to be dollar-driven, even though, as you say, Kathy, it's Juneteenth in the U.S. now, I still believe this to be dollar-driven. And so what that's going to mean is that's going to translate into weakness across the board on the dollar secondary pairs. I don't like the trade. I'll just start. Don't like it.
Okay, so the first trades that I am looking to give to Chris is
Oh dear.
Well, actually, I just told him what I would do on Dow as well. But let me be nice. Let me be nice to you, Chris. I like you. So I'm going to share. Can you please see my screen? You can. Brilliant. Okay. Now this is going to be a little bit contrarian because of the US dollar, recent US dollar strength. But this is dollar CAD, guys, in end of day time frame. And what I would like to do is I would like to short sell dollar CAD at 124 even. Okay, so I can put an order for it to be filled, or if you want me to do it, I can do it right now at market price. We are not too far away from it. It's about 25, 30 points away.
Currencies are Chris's wheelhouse, so
I know. I'm because he does currencies, and obviously, if you're going with a US dollar strength, this would mean that this is continuously bullish. The way I'm seeing it is there is a 61.8 Fib retracement. There is also a falling resistance trend line. We have different lows in weekly and monthly. So for me, this looks like an oversold bounce back in overall fairly significant prevailing downtrend. So I'm going to short it. And I would like to see how would Chris handle the same position, because obviously currencies are his kind of stronger point. So I'm just going to be nice to you.
Thank you, Philip.
So that's it.
So go ahead. What do you think about this?
Yeah,
I think you need to share his screen.
I actually really like that. Yeah, and please do share my screen. I actually really like the idea of shorting dollar CAD. What I'm going to do to manage this, because I have to take the trade Philip has given me, is I'm going to give a generous stop as well. I'm going to be even more generous than 24.10 because I feel like I need to be. I need to give the market a little bit of room here. I do like it, though. I do actually like that position because if you look as well, if you look on the daily time frame, we've had a pretty solid rally for a little while now, and we've just gone ahead and taken out this high right here, this high of resistance. So, I mean, I'm anticipating a pullback anyway. And the fact that the stochastic RSI, if you look at that, is at 100%, sitting at 100%, means that this is very much oversold. So I actually like that, and I'm in agreement with that, Philip. It's just a case of timing for me. So what I'm going to do is I'm going to use the high of this
Don't
current
wiggle
candle.
out now. Don't wiggle out. They told us it has to be a market execution, so you're in it now.
That's true. It's a market trade right now.
I won't wiggle out. I'll take it. I'll take it.
Top. Go on, please.
All right. Here we go, Philip. Let's get you into some terrible trades here. On Aussie Kiwi, I would like to go long. And on Euro Swiss, I'd like for you to go short, please.
Aussie.
Just don't do it with my account.
Sorry, Aussie Kiwi. You did what?
Long on. Yep, long on Aussie
and what
Kiwi.
was the other one?
Euro Swiss.
Euro Swiss. Did I say long or short, Kathy?
Short. So basically he's long Aussie Kiwi around 107.86.
Okay.
And short Euro Swiss around 109.36.35. The clock is ticking. Time is flying. We are now in our last block. It is Friday. We're heading into a new trading week with a UK rate decision, PMIs from Europe, retail sales from Australia, Canada, almost nothing from the US outside of personal income and personal spending. So with that in mind, we'd like to see what your best trades are for the coming week. Let's start with you, Chris.
Right. So I think it's appropriate to speak about the dollar, being that given everything you just said. So I'll start there. The dollar index. Okay, it looks like on the daily time frame we've got a beautiful King's Crown formation that's formed here, or sorry, a sub-crown formation. We're currently sitting after the most recent rally. We're currently sitting at, it looks like, just shy of a 69.4% Fibonacci retracement level. And so if this holds, then that means that we're still technically at a 618. So I'd be very bearish on the dollar if this does in fact hold and we start to see a pullback at this point. Because what I'm anticipating that the market's doing right now is forming that right tip of the crown. So, you have your left tip, your center tip, and then this would now be the right tip forming of the crown. And so I'd be looking to target 87.12 on this. And that makes sense because if I turn over to the pound dollar, okay, I'm actually longer term bullish on pound dollar. So, right now we're seeing the dollar strengthen. I'm taking advantage of that move in the market currently, but longer term, I am expecting that it'll start to weaken again. And so that would, of course, translate into strength on the dollar secondary pairs.
Philip, what are you giving us for the coming week?
Sorry, yeah, I was looking actually at a couple of things there as well, from the sterling, from cable point of view as well, and I was in a camp which believed that sterling dollar could possibly end up a year at 149. So because of the current changes, that doesn't look as likely, but I have a bullish bias in relation to sterling against the dollar. I'm going to leave that for now. It needs to break to the upside, needs to go back higher in order for me to kind of engage with it again. Longer term position, it's probably going to be a gold again. This area here, this shaded area here, is definitely of interest for me because that's a 61.8 Fib retracement of this swing low to this swing high. This position that I took in Dow Jones, I took identical one in gold at the breakout of this area here because you see the same divergence here. So it's the same setup, double bottom, higher low. Stochastics, unemotional, stupid, dumb mathematical formula. This is filled with emotion, greed, and fear, and testosterone mostly. It's creating a higher low, and off it goes higher. So I took this trade, and this was a longer-term daily falling resistance trend line here as well, and a breakout and so on. So I'm bullish gold. I was bullish gold, and I'm still bullish gold. I would look to find the reason to get in this trade long. I'm not getting it from a daily candle because this is really ugly looking shooting star, or there's like a pin bar here. You can't really see it from my drawings. But if I see a big reversal here, a morning star reversal, bullish engulfing like this, a doji, a bullish hammer forming here, I would wait for something like that, assuming that it doesn't dip below 1755. An end of day or a weekly close below 1755 would definitely spook me, and I would walk away from. I wouldn't trigger this trade. But if I see a reversal of some sort later on today, or possibly even next week, I would likely get in as close to 1760, 1770 because of that 61.8.